Hey guys, it's Greg Raymer, and on today's Real Estate Update, we're going to talk about higher interest rates. So if you're thinking of buying or selling a house right now, the two main things you're likely thinking of are why are mortgage rates so high, and when will they go back down, hopefully? Addressing the first question there is that 30-year fixed mortgages are influenced by the supply and demand of what we call mortgage-backed securities, which are investment products similar to bonds. And they basically consist of a bundle of home loans and other real estate related debt that are purchased from the bank that issued them. So any investor who buys these products is essentially lending money to home buyers. Now, without sounding like an economist, just know that demand for these products helps determine the spread between the 10-year treasury yield and the 30-year fixed rate mortgage rate, which has historically been a spread of about 1.72%. So, comparatively speaking, as of last week, it's around 3.2%, which is almost double what it normally is. Now, this large of a spread is really unusual, and the only other times it's been this way is during periods of high inflation or economic volatility, like periods we saw during the early 80s or the financial crisis of 08-09. And guess what other time this could apply to? That's right, we're living through it right now. At the end of the day, when there is perceived to be more risk, like fear of a recession, more inflation, or whatever, again, what we're living through right now, there is lower demand for these mortgage-backed products, so rates are priced higher to make them more attractive to investors. Now, as to the second question of when rates will go back down, the consensus seems to be that the Fed will pull back on further increasing the rates for the rest of the year, which provides investors with more certainty and which will allow rates to return closer to their historical average. Unfortunately, though, nobody really knows for sure. It's unlikely they will get back to the historical average, as some of the risks are now locked in and are here to stay, it seems. So, that in a nutshell is why loan rates are higher. And so I hope that gives you a little insight that maybe you didn't have before. And with that, we'll see you on the next Real Estate Update. Take care, everybody.